Ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. Today's date is October 22nd, 2014. I'm going to talk to you about the dollar versus Canada as we prepare for the Bank of Canada interest rate decision going to take place at 10 a.m. tomorrow. Before I get started, let me push you to our Forex Live website where Adam Button has done a wonderful preview for that interest rate decision. All the fundamentals, all the nuances of the decision are there. Go there, read it. You'll be prepared, aware, and prepared for that decision from a fundamental perspective. Now, I'm here to talk to you a little bit about the technical perspective and try to put you aware and prepared for it. And I'm going to start off by taking a quick look at the weekly chart. And I'm going to go back and I'm going to take a look at the high price going back to 2009 and the low price going back to 2011. And if we zoom in and take a look at the 50% retracement of that move, that level comes in at 112.33. Remember that number, 112.33. The other level I want you to remember is this high price at 112.77. That was a high price for 2014 until last week when the market moved to the upside and reached our new high at the 113.84 level. So 112.33, 112.77, 113.84. Now let's go to the hourly chart now. And at the 112.33 level, remember that level, that's also the 50% retracement of the move up from the October low to the October high. And that level comes in at 112.33. So you can see the importance of that 112.33. And lo and behold, when we corrected up today to that level, the market found sellers. So it's staying below that ceiling. Key level, remember that level. The next level, that 112.77. I put a horizontal line across the chart there. That, again, corresponds with the high price of 2014 before last week's move to the upside sent it up to the 113.84 level. So we have those two levels on the top side. Now, that we need to get above in order to push this market higher. In between that 112.33 level, we're going to have the 200 and the 100-hour moving average, and we're going to also have this trend line. This trend line actually held resistance on trading today when the market moved up in the Asian session, tested that trend line. It couldn't move above that level, couldn't move above this 95 level or this high right here. And then the market started to rotate to the downside. We fell below the 100-hour moving average, nice momentum bar here, and then below the 200-hour moving average, nice momentum on this bar right here. And then we consolidated during the North American session. Couldn't get above that 112.33 level much here. We did a little bit here, but nothing here. And so that's where the market is finding its ceiling. So this trend line is important, and we can imagine that at 10 a.m. tomorrow, which is going to be somewhere around this time right here, that this is where the resistance is going to be off the trend line. Now, these moving averages right here, you can also imagine that they may start to correspond and converge with the trend line right here and right here. And so we may have the 100, the 200, and the trend line all together somewhere around the 112.53 level on the top side. And so if the market moves above that 53 level, that's going to be a key break to the upside for the dollar versus Canada. So put a line in your chart somewhere around that level. And imagine tomorrow morning when we come in and take a look at the chart, we're going to have the 100 right there, we're going to have the 200 right there, we're going to have the trend line right there, all telling us this is going to be our key level. We got to get above that level on the top side in order to push this market higher. If we can get above that level, then look for the 38.2, look for the 77 level, look for the 95 high for the week, and then open up the door for further upside. Those are our steps to the upside. Now, what are our steps to the downside for this currency pair? Well, first, we need to stay below 112.33, and then we're going to start to look down toward our low price for the week. That was this. Well, that wasn't the week. It was Monday's low right here. We need to get below the 112.09 level, and then we're going to start to look toward the bottom side trend line, which again, if you imagine that we're going to be somewhere around this time period when that. When the statement is made, this is going to correspond roughly with these lows right through here, where the market found a base again above the 100 and 200-hour moving average before surging to the upside. So if this 112.54-ish type level is going to be a key level on the top side, this area right here around the 111.82 to 86 level is going to be a key level on the downside. So key level right here, key level right there. In between, neutral, look for sellers here, look for buyers here, look for a break to lead to momentum, a break to lead to momentum, and that's how you play it, depending upon what the statement says, and you'll have those details at 10 a.m. tomorrow. So there you have it, a technical look at the dollar versus Canada. Adam gave you the great look of the fundamentals from our website at ForexLive.com. Good fortune with your trading, everybody. My name is Greg Michalowski. Bye-bye now.